Welcome to My Home HQ Podcast with Ray Fletcher. Leading the way in buying and selling homes, knowing the current housing market, updating your home without an extensive remodel, or how to stage your home for the perfect sale and more. Portland, Oregon real estate agent Ray Fletcher will bring his 20-plus years experience of real estate, home ownership, and selling homes to you in his bi-monthly podcast. This podcast will be your home headquarters for strategies to achieve success in your real estate investments. Now your host of the podcast, Terry Fletcher.
Hello, everyone, and welcome to the My Home HQ podcast with Ray Fletcher. Ray is our resident home and real estate expert in the Portland, Oregon area, and he is here today to chat with me about all things real estate. I'm your host, Terry Fletcher. So, Ray, how was your Labor Day? I know I had to deal with the fantasy football draft all weekend.
Oh, ours was very good. We went to the lake and had a great time.
Oh, good. So now that we're into September, I wanted to really talk about the current state of the real estate market. We're not, and well, some of the country still is, but we're not in that heat wave anymore. So people probably are going out saying, well, maybe it's time that I take a look before the end of the year. I know they want some tax breaks. And I've seen a lot of different reports everywhere. You know, the government tells us what we want to hear about inflation and tax rates, but the national average, I just looked it up today, and it's crossed the 7% mark the third week in August, and it said it was 7.09% the week ending August 17th. So now in September, I'm just astounded of what people are paying. I mean, I remember, and you and I have talked about this in previous episodes, your niece, my daughter, she got hers for 2.9% in 2021. So that's only, less than 2 years ago. But they also said the existing median home sales price throughout the country is $400,000. And I'm like, what? So are home prices, or I should say home sales, dropping, or are they still high? Are they declining, or what's going on?
Yes. So home sales are definitely declining.
Okay.
The people that are able to move and buy and those type of things are basically doing all cash. The people that are moving and doing and making moves are not first-time home buyers. This is where it's hurting everybody, is the first-time home buyer. So an example would be back in the day when you can get a 3.5% on your interest rate, excuse me, and you buy a house that's $500,000, that just your principal and interest, because taxes are different, your insurance is different, was $1,796, so $1,800 on a $500,000 loan.
Okay.
That was relatively affordable. So if you add your taxes and insurance, that's $2,300 a month. Now that's with 20% down, so $100,000. When the rates were low, people had money. They found a way, they could borrow some of that, and they just found a way to get into it. So that same $500,000 home, your first-time home buyer, your entry-level house, when you're dealing with, so the rates I got today are 7.232.
Holy moly, that's more than what I saw. Wow.
So that makes your payment $2,725 a month. That's $1,000 a month more. Add your taxes and insurance, you're looking at $3,200 a month.
Oh my God.
It just doesn't, it's not penciling out. Now, if you were to go FHA, which is what most people do, this is where it's a problem. So FHA is only 3.5% down. So $500,000, you're looking at $17,500. The rate today is 8.365.
You're
Yeah.
kidding me.
So let's say you're a first-time home buyer. You just got out of college, or you've been working your life. You're 25 years old. You're out of college a while even. Maybe you just got a vocational degree, and you're a journeyman worker. You make good money. That first-time home buyer, $500,000, $17,500 down. That interest rate, your principal and interest is $3,664 a month. I'm not done yet. You have to have PMI, that private mortgage insurance.
Oh, right.
Which if you default, right, it's not insurance.
Right.
That's $400 a month. Add your taxes and insurance. A $500,000 home today is $4,617.
I don't even know how to respond to that.
Should we just end the podcast now? Is
I
that the
know.
status of the market you wanted to know? I mean,
Whoa.
it's mind blowing to me. So I have some first time home buyers that I've been trying to work with, and it's interesting. So as a new person in real estate, even old, a buyer or seller, you want updates from your realtor. And the thing that I've always told myself is, even if you don't have an update, just the communication of I don't have an update is an update, and that eases the buyer seller's mind that you're still thinking of them, you still know that they're there, and you're working. And so for me, I have these new buyers that they want their payment to not go any higher than $2,500 a month, and that's pushing it. And so back in the day, when you can get a $300,000 fixer, because they're 350, I guess would be more of the number. And not that long ago, you can get a that kind of fixer, and the rate was 4%. I mean, your payment with the private mortgage insurance was $2,300 a month at 350.
Gosh.
And so now that same 350 at the 8%, 8.365, it's $3,200 if you found a $350,000 home. So now what I'm doing is I'm shifting gears, and there's a lot of homes, a lot of these lower fixers are sitting. I mean, they are sitting. So now I'm calling the agents going, hey, would your seller consider an owner contract? And so far, I mean, some say no because they have too large of a mortgage, but some are like, what do you have in mind? And I'm like, let me go look at it. So like today at 3:30, I'm going to go look at a house. It's an owner. We're looking at an owner contract. It's a manufactured home on land, and it's $200,000. And I promise you, it's going to be a mess.
Wow.
But if he can get into it for $10,000 down, make his payments $1,500 a month, do the work himself, and I mean, it's a home, and he's finally out of an apartment. He's making payments, and he has something. So
What's an owner contract?
So an owner contract means that the owner is going to hold the note. Now, you want to make sure that the property is paid for, because if the banks, when they lend money, it's owner occupied money, right? Like if you go FHA, you're signing a thing that says, I will occupy this property. Now, you traditionally have to occupy it for 2 to 3 years, and then you can rent it out and things like that. Like the last podcast, we were talking about investment properties. Well, some of the financing you're getting is only owner-occupied financing. And so that's the best rate. If you're doing investment financing, then it's usually 20%, 20 to 25% down minimum.
Wow.
And the rates are a little bit higher even on that. I'm giving you residential owner-occupied rates, not commercial or investment property rates. And so I don't remember what the question was, but with that said, it's a matter of getting into the house and going from there. Yeah.
Wow. So I have some questions on this then, because it seems like now you got to kind of go back to basics when it comes to qualify for a house at these rates. So I have some questions. Maybe our listeners might too. So I was reading on Redfin report and on the National Association of Realtors report, NAR. They were saying that first-time home buyers hoping to buy a starter home, but this is a starter home that's $275 or less.
Yeah.
And you're like, yeah, that doesn't really exist much. But they were saying you have to earn about $64,500 a year, which is 13% more than a year ago, which was $56,000.
Yeah.
And then my question is, how much, because I realize if you're cash only, you don't have to deal with credit score and income and all that, because you're just saying, I'm just going to pay for it. Why do you care?
Right.
But if you're one of those first-time home buyers, how much does it factor in now with how high the interest rates are, as far as having that credit score, having employment history, and what are you seeing that the income thresholds are? Do you have to have a cosigner? And last but not least, what about that Fannie Mae, Freddie Mac, good credit nonsense the government put on there? Is that still there?
So all that is all elevated now. So back in the day, during COVID, I could just call my lender, have them call my new buyer that I'm just going to start working with. They give them their social, tell them what they make. They'd pull their credit, look at everything. I'd get a pre-approval letter in less than a day. Now, just for an example, our nephew is getting pre-approved. And so I sent him to a lender. That it's taking a week. They want all the documentation. They want to confirm where the money's coming from, maybe even a letter from the employer. And if you're self-employed, borderline forget about it, because your 1099 and your proof of income is just deposits. And if you're brand new self-employed, there's no record of that employment. So now you're going on your previous employment. Maybe that was a regular job, but you went on your own because you found an opportunity. Anyways, make a long story short, they are digging deep on these buyers, and they are making sure that they are very well qualified and can afford these crazy payments.
Wow. Well, I know that with Summer and Christian, Summer has like an 850 credit score, which I guess is unheard of at her age group.
Sure.
And Christian's was, I think, 799 or something. And so she said that the lender, and this was again almost 2 years ago, they were like, wait, I don't think that's right. And she's like, no, it's right. My mom makes me pay my bills and
Yeah.
and not have any debt. She's like, she's almost like relentless about it. And she says, we can't find people right now with credit scores over 700. So that's also factoring in the lower the credit score or credit worthiness, I should say. And like you said, employment history and income you can verify, the 7.5% you talked about, or 8%, that goes even higher, right?
Yeah.
Oh,
It could. Yeah.
man.
This is all based on really good credit. This is not a hard money lender that's looking at helping somebody that has a 650 credit score
Wow.
minimum to get into a place. This is your prime, probably 750 plus borrower. When you get over 750, it doesn't change a lot. But
So
750. So
yeah,
what people might be doing is they're making minimum payments because things have shifted or their rent went up or things like that. When rates go up, so do rents.
right. Well, that's what I was going to say, is that people are trying to figure out a way to buy, because right now I know in California, I know in Oregon it's high too, but a 1 bedroom, 1 bath, no garage, no washer and dryer, you're lucky if there's a, included refrigerator, is 3,000 a month.
Yeah, it's
If, if
crazy.
if you're within 2 miles of the beach, just keep going. It's higher.
Yeah.
But the thing I don't understand is everything has gone up. There's bubbles and everything, and it seems like the real estate market just continues to be tough. And I don't understand why it doesn't finally, like, I don't know what they call it, burst like it did in 2008. Why is this happening? I mean, is the inventory just so tight and supply that, people are just saying we're gonna, I don't know. How does this happen?
So there's a lot of people that are just kind of staying put, and so the ones that are selling are moving. I mean, they're the upgrading, maybe now downsizing, but the upgrading really isn't. I'm not seeing that happen too much anymore in the current state of things. So people are either like they're tired of their local government, not to get political, but they're leaving Oregon or they're leaving California or they're leaving Washington and they're just
Right,
going east.
right.
Um,
Well, and I've
that's
noticed that.
still
Go ahead.
that's still happening.
Yeah,
So
well, I noticed also when, like you mentioned, the upgrading, I've noticed that, like a couple of friends of ours, like you said, they're leaving because of whatever political reason. They don't like the state. And so they want to go to a different one. And a lot of people are moving to Texas, even though their
yeah,
property taxes are worse than they are in California. They like the politics there. And they like the house prices. I guess I don't even think there's income tax there. I'm not, or some kind of tax there.
yeah,
But the thing that I thought was interesting is they're basically said, well, we were going to go ahead and redo the kitchen to get more money out of it. We were going to do this. They're like, nope. We pulled out all the carpet, put in neutral flooring, painted everything white, and said, here, it's upgraded. I was
yeah. We're
like,
out of here. Yeah,
oh my gosh. And they're like, cost us, $5,000, and we feel like we got 20,000 more because we freshened it up, and we're
yeah,
done.
yeah. That's exactly right. And then, but on the other hand, it's just stay put and let the storm kind of correct its course. It's going to eventually. Things always happen in an election year.
Oh, true. True.
Gas always goes down, rates goes down. I mean, things always change, and this election is going to be a wild west.
Well, especially because of, and then we won't even get started, but just because of,
Yeah,
artificial intelligence and all kinds of things that
yeah,
are adding to the fun stuff out there. But just kind of, to close out this topic, do first time home buyers, do they have a chance in this market still?
yeah. They do. I think the dream is still alive.
Okay.
So now what we're kind of seeing is sellers are getting creative, and they are offering 7,500 in closing costs, or we'll buy down your rate. So sellers, like new construction, they are offering some incentives to use their lender, and that seems to be helping. So it's still very, very possible, but we still have agents out there. I'm going to go on a side note real quick, just because I found it to be funny. So I had a buyer send me a property, and it was actually a floating home, and it was in North Portland. And she's like, "Hey, what do you think about this for a flip?" She wants to flip. I'm like, "I think it could be a good idea." She goes, "I can't find it anywhere, and except on Zillow." And so I'm looking, can't find it. And so finally, I after enough searching, I find it. The agent put the zip code in inland, like 40 miles away from where this property was.
Oh, no.
And so one thing to keep in mind if you're a seller, and this is very important, make sure you have a good agent.
Number one thing of real estate. We're on episode 20, folks. Make sure you have a good agent.
And we've said this before, and I think I always try to reiterate it every time. And again, make sure you have a good agent, and really look at what they're doing. Don't assume anything. And so here's the whole punchline on this. Imagine you're a seller and you trust this agent, and you're going to pay them anywhere from 4 to 6% to sell your home. And your home is, just for easy math, $300,000. That's good money. And in this time frame, the first 30 days, no showings. And so what do? You do a price reduction. And then 2 more weeks, no showings. And you do another price reduction. And now you're 50 grand less. And then to find out, your agent put the wrong zip code in. So you don't even know what your place is worth.
Wow.
And so not only is this agent costing you money, they're costing you time on the market and everything else. And of course, I text the agent immediately. I go, "Hey, heads up,
just
you
so
put
you
the
know.
wrong zip code in." And all her response was, "Oops." Yeah,
wow.
oops.
Wow.
So it makes, with that said, look at your listing. Look at your place on Zillow, on Redfin. Have them email you the listing from your local multiple listing service, and go through. I mean, I go through everything 10 times because it happens, and it's the agent's fault. There's no excuse for it, but it should be fixed very quickly. You should always be checking your work, and so that doesn't help this market either when there's stuff like that going on.
Oh, definitely not.
Yeah.
So I like this episode because it just really gives a reality for everyone what the current state of the real estate market is. There is hope for that first-time home buyer, for vintage, or I should say home buyers that have been out there before. Just make sure you're looking at everything before you jump right in, and hopefully getting the loan situation and the amounts down that are appropriate. But also, Ray, where can they contact you if they have a question, they need you as a realtor, or if they need a referral from you?
They can contact me directly at my phone number, 503-703-1999. They can email me at realtorrayf@gmail.com. Those are the 2 best ways.
Okay, and where can they get your newsletter?
Call or text.
Okay, great.
Call or text or email, and I'll put them on a list.
Okay, great. I love your newsletter. It gives us a lot of information. I'll read it every week when I get it. So everyone, thank you again for listening today to our podcast. And Ray, this has been a great episode, and I'll talk to you later in the month.
Sounds great. Thank you.
That's it for today for us this week, folks. From My Home HQ podcast. Join us next time when we bring you more topics on real estate, home buying, selling, investing, and more. Drop us a rating and a review on Apple Podcasts, Spotify, Stitcher, Audible, Amazon Podcasts, or wherever you listen to your podcasts. Make it a great rest of your month, and thank you again for listening to My Home HQ podcast with Ray Fletcher.
Thank you for listening to My Home HQ podcast with Ray Fletcher. Drop us a rating and review on Apple Podcasts, Amazon Podcasts, Stitcher, Spotify, or wherever you listen to podcasts. Check out our website and blog at www.rayfletcher.biz or contact Ray directly at realtorrayf@gmail.com to also subscribe to his weekly newsletter.